Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada. And I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. And today's topic is GST rental rebate. On September 13, our Prime Minister came out to announce that they are going to eliminate the tax completely on builders who are trying to build rental housing. In the past, what happened is that when you build a purpose-built rental property, you are required to do something called a self-assessment when the property is completely done or when the property is ready for occupancy purpose. You're supposed to, as the builder or owner of this particular property, you're supposed to come up with the fair market value of the property at the time when it's finished. And then charge yourself an HST in Ontario, or charge yourself GST, or depending on which province you are in, and different rules will apply. But in Ontario, you're supposed to charge yourself a HST on the fair market value of your rental property and remit the HST net of the HST that you pay to CRA. And then you can apply for a HST rebate from the government. This process, this type of calculation would pretty much always force the rental builder an additional tens of thousands of dollars when they build a purpose-built rental property. And now our Prime Minister came out and said, hey, we are going to help those people who are building over 4 units and more to potentially eliminate the GST component of the HST that we have to pay. Now I'm going to dive deeper into an example of what this really means to you. Now, but before I get started, make sure that you give us a thumbs up if you like our video. If there is any improvement idea that you want us to do and implement, and if you have questions about this, make sure you leave it in the comment section below. And make sure you also subscribe so then you can stay on top of the latest tax tip. Before I go into the detailed example of how it's being calculated, I think it's worthwhile to go through an example of how this whole tax is being calculated with the use of an example. No, let's scrap all that. Before I get into what has been changed, it's also important for you guys to understand how the current rule actually applies, because the current rule will continue to apply to a certain segment of the rental housing supply, and the other segment of it would not be applicable. So it's important to use an example to illustrate how this works. Now, with that, let's look at the screen here. Okay, so here is the example. Assuming you are a builder, you're trying to build a purpose-built rental unit. In the past, before this legislation come in, what happened is that you would purchase a piece of land, whether you purchase a residential property, tear it down, or you buy a piece of vacant land. Depending on your particular situation, HST may or may not be applicable when you purchase the property. Now, let's say you purchase a piece of land for $200,000 and you pay HST on it. Let's say it's $26,000. Majority of the time, I see that the HST isn't really applicable for the land because you will have HST number and all that. But for the purpose of this particular example, I'm just going to illustrate to you with HST on land. Let's say you pay HST on land, so you pay $26,000 on the $200,000 purchase price, and now the cost for you to build this residential unit, residential building with more than 4plex is about $500,000. Now, of course, when you pay the contractor for $500,000, the HST that you would pay on the $500,000 is $65,000. This HST amount right now, I calculated it. I assume it's 13% of the cost to build. The actual amount that you pay is really based on the invoice, individual invoice that you get from your contractors, electrician, plumber, architect, and everything. Now, let's say the total cost for you to get the place ready to be substantially renovated is $700,000. And through this process, you would have incurred $91,000 of HST that you pay. Now remember, I mentioned earlier, when the property is complete, you are required as the owner to do a self-assessment and then remit the HST on the fair market value of the property. Now, in this particular example, the builder, the owner, estimated the fair market value at $1.5 million. You need to have an appraisal, some sort of evidence to prove that it's $1.5 million. Now, let's say this is a $1.5 million value. Now, HST on the $1.5 million is about $195,000. Now, the owner will then have to pay about $104,000 to CRA. Now, with this $195,000 HST on fair market value, net of the HST that he paid to various vendors, the net amount would be payable to government, $104,000. Now, the rental rebate available is about $24,000 because under the current legislation, the federal rebate is only $6,300 is available. And this $6,300 is completely wiped out if your fair market value of the property is over $450,000. So because the valuation is 1.5, so there is no rental, no GST portion of the rebate. And this $24,000 represents the PST portion, the Ontario rebate. So there's no GST rebate. So even net of the GST rebate that the builder is expected to get, the amount that the builder has to pay out of pocket to CRA just on GST, HST alone, it's about $80,000 in total in our example. And just keep in mind that this example, this illustration is completely run with the Ontario assumption. Now the true cost to the builder is the cost of land, which is $200,000, cost to build, which was the $500,000 that we mentioned, and the net HST paid to CRA, which is the $80,000. As you can see, this is $780,000 in total. This $80,000 is created absolutely out of nothing, other than that they created the property and they are being required to do a self-assessment on the property because they created the property. So this really sucks. And so our government finally recognized this particular problem. And so they announced on September 14, if you're starting to build a property that's 4 units and more, you would then be able to claim 100% of the GST that you pay back from the government. So they're not waiving it, they're waiving it and they're not waiving it. In the news channel, they have always been talking about no GST to be paid. But the reality is that you are paying the GST, but you're applying it in the form of a rebate. There are a couple of qualifying units that you have to meet for this to work. The first thing is that you have to start building. You cannot have a property that was started a year ago and now you want to apply this, it won't work. You need to show that the start building date is September 14, 2013 and afterwards. This particular rental rebate would only be available for you if you are doing 4 private apartment units and up. So if you're only doing new build for 2 units or 3 units, this will not apply to you. The old rules that we went through would apply to you. Now, and also they do require 90% of the residential units to be designated for long-term rental. So if you have only built a 4-plex and 3 of the units are being used for long-term rental and the 1 unit is being used for short-term rental, then unfortunately 75% of the unit is being used for long-term and 25% is being used for short-term, and it would not qualify and meet the second criteria of 90%. So you still would not be able to qualify for this enhanced GST rebate. Also, they mentioned convert existing non-residential real estate. So if you're converting a commercial building to a residential building, you would also be eligible for the enhanced GST rebate. On the other hand, on the flip side, if you are buying a house and divide it up to a 4-unit, doing substantial renovation, that does not apply. This does not apply. If you're doing substantial renovation on a residential unit, this would only apply if you're converting from commercial to residential. And this would also not apply to individual condo unit, single unit housing, duplexes, triplexes, housing co-ops, and own houses situated on leased land, and all these things. Now, all these are the example. Now, what does that really mean if this applies to you? Well, it leaves a lot of questions mark in the market, but if I use the same calculation with this enhanced GST rebate that we are seeing that's being offered by the government, we can take a quick glance at how this math would come out, assuming the same fact from my previous example. So let's look at it. So you have, as before, the same piece of land, you get $200,000, cost to build is $500,000. Again, you pay $700,000 for the land and also the cost to build. And then you pay HST of $91,000 in the example, same as before. Now, the fair market value of the property is still 1.5, and the assessment, the HST that you would otherwise need to pay CRA is $195,000. Sorry. The HST calculated on the fair market value is the same $195,000 that we calculated before. Now, you still need to probably pay to the government $104,000. $195,000 minus the $91,000 that you pay. The net amount is being paid to CRA. Now, the only difference is that the rental rebate, the 5% GST rebate that you did not qualify in the past under the current rule. Remember, the rule is that the maximum you can get is $6,300 from the federal government as the rebate. And you would not be able to qualify for the rebate if your property value is over $450,000. Now, with the new rental rebate generously being offered by our federal government, using the same logic as how it was calculated in the past, using the same rule. This still has to be finalized. The rule hasn't come out. The legislation hasn't officially been come out. How they come up with it, we don't know. But if I apply the same calculation as in the past, the rental rebate available would be 5% of the GST. That's 100% refundable. So under the new rule, you are going to get 5% GST back. The GST rate is currently at 5% in Ontario. You're going to get that 100% refunded, the entire 5% that you pay. So 5% on the $1.5 million valuation is about $75,000. So you're going to get $75,000 out of the $195,000 that you pay. So $75,000 is the federal portion, plus the original $24,000 provincial portion that you would normally qualify for. So the two combined, you're getting $99,000 back. And so net of what you would otherwise need to pay to CRA, the net out of pocket to the builder is $5,000 only, as compared to if there is no new legislation, the builder would have to cough out $80,000 additional versus $5,000 under the new legislation. Now, again, like I mentioned before, there is no confirmation if this is going to be the way, but using the same logic as before, with the existing calculation, I'm guessing that this would be the calculation. We have to wait until the legislation come out, the policy come out to really confirm the actual calculation. Now, in terms of true cost, the land and the cost to build stay the same. Net HST to CRA is now reduced to $5,000. So at the end of the day, the true cost to build is $705,000 versus in the past, it would have been $780,000. So huge difference, $75,000 difference. And we're talking about a small building. So it could be a substantially different amount. So unfortunately, in our real estate world, there are still tons and tons of questions on this particular bill and announcement because not a lot of details had come out. One of the questions is how you calculate the GST rebate. In my mind, that's one of the questions. The second question is how do you determine the start date of the building? Because it mentioned that in the announcement that it has to be after September 13, and then the building must be complete before 2031. The other issue that has yet to be resolved is also for mixed building. How is this going to be converted? So these are all the unanswered questions that we're still waiting for the government to further clarify for us. So this is an update. If you like it, make sure you give us a thumbs up. Hit the subscribe button, share this video with people that you like. Until next time, happy Canadian real estate investing.